All right, today is Saturday, May 11th, and this is my weekly review. So thank you for tuning in. Just want to go over a few things with the index, and then I'm going to get to some stocks. A lot of stocks today because they're acting much better. Ever since that low of April 19th, the Nasdaq has had 3 consecutive up weeks, and you can see the close of the week has been near the highs there. 1, 2, 3 weeks in a row. So last week, the Nasdaq was up 185 points or 1.14%. And most of the heavy lifting or all of the heavy lifting was done on Monday. I'm going to get to that in a minute. I believe, this April 19th low and reversal here the following week started a new uptrend, and I'm going to show you why. Here it is, April 19th, right here, 15,222. And from there, it went on 1,100 point run and just went sideways the last 4 days last week. Now, I just want to point out one thing is this day right here was the jobs number day. And it's really important, the jobs number, because there's a couple things the Fed looks at. One's inflation, the other is jobs. And it appears the jobs market was weakening. We got more evidence to corroborate that thesis last Thursday with the unemployment numbers, more people unemployed. That's not good. But, Wall Street believes that monetary policy is a little restrictive right now, and they want lower rates. And I think they're going to get them sooner than later, as inflation is going to come down. The inflation is in shelter, housing, which is going to be persistent even with higher rates. And the insurance companies, which has been basically a ripoff. Anyway, enough of that crap. This is the Nasdaq, and I just want to point out a couple things. This is the Jobs Friday, where it leaped above the moving averages. Right here, it's kind of wallowing below the 10 and the 21. And the jobs report on that Friday, May 3rd, ignited a rally, 2%. You could call that, in spirit, a follow-through day. Then on Monday, it did follow through with a nice 192 or 93% jump, and then it went sideways the rest of the week. If you look at that last number there, 16,349, that was the close on Monday, and it closed Friday at 16,340. So we lost like 8 points the rest of the week. It just went sideways, a little up and a little down. It just went sideways, digesting this big move here, which is great, which is fine. I just want to point out a couple of things right here. This is your 50 moving average, and your 50 simple now has been crossed over by the 10, which is this green line. Okay, the green line went through the red line. Pretty simple stuff. And so it shows that the faster moving average is now trending higher. You can see the magenta line right here, the pink line, that's the 21. That appears to be going through the 50 if we just trade sideways. As long as we don't get that 200, 300 point sell-off, these short-term moving averages are going to trade through the 50. I am a trend trader. I'm not a bottom fisher, and I don't basically short stock. So I need a trend to be successful. I like the tailwinds from the market at my back. So this is important for me as a trend trader to step on the gas. I don't have the pedal to the metal yet. I'm waiting for the power trend to begin, but I do have my foot on the gas, about 70% invested, and I will become more invested once we begin a power trend. Just want to point this out though. 1, 2, 3, 4, 5, 6 days where the low of the day is above the 21. And that is significant. That's why I'm more aggressive. And that's all I'm watching right now is the relationship between the low of the day and the 21 EMA. And that's it for that. I'm not going to go through the S&P or the Dow or anything. I'm going to move right to stocks. This week, I'm just going to go through some leading stocks, and I'm going to get to the gaps, because during earnings season, we have stocks gapping, and, stocks, that were once leaders could fail, and ones that have been kind of struggling could now be new leaders. So you got to pay attention to that. I'm going to show you about 20 that gapped higher that could be heading to more gains. This is NVIDIA. Obviously, everybody's interested in NVIDIA. I mean, this is a 2.3 trillion market cap stock. It ran from 450 to 974, and it's just digesting its gains, doing nothing wrong, consolidating in a base. I wouldn't expect real big moves from this thing. I would expect it to stay in this base till at least May 22nd when they report earnings. The comps are getting a little tougher for NVIDIA, but I believe they're going to crush earnings and raise forward guidance. So you just got to see how the stock reacts to that. A couple of other names in the group. I'm just going through some leading groups and leading stocks to start the weekly review. I should show the weekly chart. AMD, this one made a new high at 227 on March 8th and has just fallen, into a consolidation pattern, a little more severe than NVIDIA here. And you can see the earnings line is just kind of, we expect more from AMD. If you want your stock to rip, like we saw the big buying here in the early part of the year, this earnings line has to start heading north. Or there's just going to be sellers. You got to have earnings here. That's what I like about this market right now. Earnings are being rewarded, and that's important for me because it's a lot easier to track stocks this way. You can see NVIDIA's earnings are just due north, and that's why the stock is going due north. Another one I want to show you is TSM, Taiwan Semi, another big stock. This is a 775 billion market cap. So this is a big kahuna in the semiconductor space. And you can see its earnings line is just kind of trending sideways. I would like to see it just ramp higher, but this one I wanted to show you because of the base pattern there. You can see that double bottom here, ramped on Friday, 4.5%. Definitely one to watch. I would like to see this thing, just go sideways here and allow the moving averages to catch up, around that 148 area. That looks fantastic. Out of those three, this one I believe is the most actionable. Anyway, I'm going to move on to some of the software names. Spotify is one of my leading stocks here. It had a nice reaction to earnings and then it didn't, right? Traded down to the 50, popped up, traded back down to the 50, kind of a wild move, but it's just starting to grind higher. You can see the moving averages, the 10, 21, and 50 are stacked, and it's just trending higher. Having some problems with the 300 number, which is to be expected. DUOLL, this is why you have to know when your stocks are reporting earnings because, they can have a disastrous time. You got to, I'd usually trim. If I have a big position, I trim because I don't want to take a 18% loss, wake up one morning to that. No, thank you. And then it followed through to the downside on Friday. So DUOLL looks pretty cooked right here and traded, down to the, I think that's the 30-week line. Nope, that's the 200. That's the 40-week line. Okay. So DUOLL takes a trip to the 200, and that is adios muchachos for this fella. Another one in the group that's faring a little better is AppLovin. Fantastic move here. I have it on my gap list, so I'll get to it later. I'm not going to go over this. It did gap 14%. And this, when it gaps here and it gaps here, that's telling you something. A serial gapper, as you can see, it gapped here on August 10th, and it gaps here on February 15th, and it gaps higher on May 9th. So that's telling you all you really need to know, right? Okay, I'm going to get to the I guess the data center hardware stocks, Vertiv Holdings. This thing I believe is going to have a little trouble with 100. It's made a heck of a move, and it ran up to $100.30 on Friday, then reversed lower. But I mean, you can see the moving averages are stacked here, and it's just trending in the right direction. This is a trend trader's dream right here. The earnings line is just gradually heading north. This is a steady Eddie. It doesn't have these wild moves like SMCI. It's just kind of steadily climbing higher. That one looks fantastic. Yeah, it did pull back to the 50 before earnings, one time since its breakout. So that was a buy there if you are inclined to do so. I did mention SMCI, so I got to show you this wild one. A lot of people say it topped, and by all accounts, it did top here at 1,077, then it reversed higher to a 1229, and then it fell out below its 50. And for me, that's adios muchachos. But I wouldn't give up on this one because it still has the earnings line heading due north, and it just might be correcting in a base. I know people want to say, oh, it's climactic. It's late stage, which it is. All that is true. You can see that late stage base there. And then the rip higher, that does look climactic. But if this AI theme is going to continue out, for years and years, like I believe it will, this thing could just form a base. And if they continue to report earnings and raise guidance, I think their guidance here was 15.1 billion that they raised on April 30th. So if they raise to 16, 17, 18, the stock's gonna reflect that in time. So don't give up on these things. Just because it's sliced to 50, I don't own it because of that, but I'm keeping my eye on it here at $800. Super micro. Dell is one that I had on a ready list last week. And to me, this is just forming a base here. Gapped higher on earnings, and they're going to report May 30th. So if it gapped higher once on earnings, it may be again. I don't know. I wouldn't place a big bet on that, but Dell in the computer hardware space, yeah, we need to get this earnings line going higher here for it to appreciate more. But you can see this is just in a little base here since that breakout on the week of February 23. So Dell looks fantastic, up 6% last week. I know it was on lighter volume, but if your stock goes up 10% in lighter volume, it still went up 10%. So only price pays, as our friend Brian Shannon likes to say. This is GE. Doing nothing wrong, pulling back to the 21 and finding support, just grinding hard. That is a trend trader's dream. There's nothing to do here, but just count your money. They split up GE Healthcare and GE Veranova, which I'm going to get to in a little bit, I believe. But you can see this earnings line is heading due north. It's a leaner, meaner aerospace, defense stock. It says diversified operations, which it is. But I put it in the aerospace category along with FTAI, which has been just a fantastic stock. And you can see the earnings line heading due north with FTAI Aviation. That's just a trend trader's dream. That looks fantastic. AVAV, I had this on our ready list recently, and some folks bought it and did well with it. I mean, it was up 11% last week. We'll take that every week. You could see the base and then the gap higher than the base, and now it's moving near another standard buy point. Paint by numbers, 184.61 buy point. Had an inside day on Friday, so to me, that thing still looks actionable. Just allow these moving averages to catch up. Earnings aren't till June 25th, so that one looks very good to me. And then how I met. This one gapped out of a base. This is another one that I should cover on my stocks that are gapping higher, which I'm going to cover in a minute. But since I'm doing this right now, I'm going to pass. It was up more than 15% on May 2nd, that Thursday, before the jobs number. So the thing just trending higher and letting these moving averages catch up. Helmet looks fantastic. That's it for the aerospace group. I got to go to MU. This is my computer data storage group, which has been really strong. Got to show the weekly on Micron. This is based in Boise, where I have a lot of friends out there in Idaho. I got to say hey to Russ and the gang. This is something to note here, where the earnings line is just reversed higher because it's a cyclical business, and when the cycle kicks in, this is the down cycle, and now you're seeing the up cycle. It could last years. So it's 7% off of its high. But the data storage group looks fantastic to me. Gapped higher with earnings and pulled back. They don't report to June 26th, but now it's back above its moving averages. And that one looks fantastic. Charlie Giancarlo's company, Pure Storage, gapped higher in earnings, pull back to the 50, and then now it's just formed this double bottom base here. They're going to report May 29th. My instincts or my intuition or just my suspicion is they're going to have better than expected earnings, and this line's going to start heading north. Anyway, you can see the double bottom base there, 9 weeks on that pattern, and they're going to report here in a couple weeks. So that's Pure Storage. And then NTAP, another one that I have on my ready list. It's in the double bottom base that gapped higher following earnings. So both of those two, I think, look fantastic. Pure Storage and NetApp. Now you can see this earnings line heading north, and so definitely pay attention to that. They're going to report May 30th, so right after Pure Storage. That could get the entire group moving, something to watch for. The restaurant trade, Somebody has given me a hard time at restaurants. I don't own any restaurants except for I lied. I just bought Dutch Brothers last week just because of the earnings gap, and I had to buy one of them. But Chipotle, they're having a 50-for-1 stock split next month. Their earnings line is just heading, north. So when your earnings goes north, the stock kind of follows, or sometimes the stock leads and then the earnings come. But Chipotle's doing nothing wrong here. Fantastic, well-run company. So if they split 60-1, it'll be, I don't know, around $62 or something when they split. Anyway, this thing is just, trending, trend trader's dream right here. Support at the 21, that's when you can add. Chipotle looks fantastic. A couple other ones. SG, this is another one that I'm going to feature on my gap list higher, so I'm going to just pass on this. Yeah, it was up 34% on Friday, but I did mention that I bought Dutch Bros, and the reason why I bought Dutch Bros was, for one, the earnings report is fantastic. I like this accelerating earnings, 26, sales 26 to 39. That's a nice jump. Earnings, triple digit earnings from a negative number, but they seem to have turned it around, and they seem to be taking market share from Starbucks, which reported a horrible quarter, and the CEO seemed like a stumble bum, trying to explain away, the quarter. But this is the reason why I bought Bros, because it sold off, rightfully so, during the bear market, like everything else. And it had this long stage 1 base where it just cannot get out of its way, could not break out. And the earnings have been going up, 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 up. Okay. So usually the stock will follow the earnings. To me, this is just emerging from, a stage 1 base. And you can see it was 1, 2, 3, 4, 5, 6, 7 weeks in a row where it just sold off, so everybody who wants out of the stock is out of the stock. And then they report, killer earnings, and it was up 32% last week. Do I expect it to go up 32% every week? No. I just think that going forward, this is a stock that I can own for a longer period of time. They're going to take market share, and we'll just see how it goes. Sure, it's likely to pull back and allow the moving averages to catch up. But you can see the RS line just heading, due north after that, report. I believe it was Wednesday. And then, Thursday and Friday followed through. So it didn't have a massive gap. That was nearly 12%, then followed through with a 3% day. Then on Friday was up again, nearly 10%. So, you could see, the buyers here, that's not Aunt Sally. Dutch Brothers looks great to me. And then I have to show CAVA. I don't know anything about CAVA. We don't have them here. I know a lot of people like it, but I like the earnings line, and I like the IPO base, and yeah, there's nothing not to like about CAVA. So that's another retail restaurant group. Okay, I'm going to get to some of my favorite stocks here, more favorite than the ones that I just showed you. This is Quanta Services. Why do I like this? Well, it continues to get support at the moving averages. It's trending higher. To me, I mean, this is just a hold. They did report earnings recently. You can see the 3 weeks tied here, and it's just gradual. It's a steady eddy. This one's not going to move like, the semiconductor names or the software names, but it's just a steady eddy, up 5, almost 6% last week. And just, a real leader in this group. Another one that I have to show in this group that I like is Sterling. They reported last week as well. These are data center build outs. You can see this earnings line a little more pronounced than Quanta Services, but you could see it was in this base. Here's a consolidation, a move higher, a cup-shaped base, move higher, consolidation, move higher. So what's it probably going to do? It's probably just going to consolidate for a while. Up 27% last week. Thank you very much. There you can see the on the daily undercut the 50, blasted higher and then followed through. And that's what you want to see, in a good market, a healthy market. You see these gap ups, and then they continue higher. In a bear market, they'll come right back down to their buy points. And in a sideways market, they'll just go sideways. So this one looks fantastic. And this is telling me the market is healthy now and rewarding earnings. And that's, that's the way it should be. And that's the way I like it. And that's how I make money in a trend. So anyway, Sterling looks fantastic. PRIM, another one of these building heavy construction. You can see the big base here and the breakout. Now it's just trending higher. I mean, there's a lot of good stocks here. You can see this group is 5 out of 197 earnings, trending higher. You know, it's a small 2.6 billion stock, but still, you know, and it's there's nothing to say here. I mean, it's just trending higher. You know, if you want to buy it, I think you got to buy on pullbacks here to the moving averages and don't chase. You know, never chase stocks. So, all right, the next group I have to get to is EME. This is the building maintenance group. You can see this is the number 2 group. I like top stocks and top groups. So, you know, call me a front runner. I don't care. This one is been ripping higher for a long time. I know some famous traders announced they sold it, you know, back here, but you know, with the David Ryan ants, that's fine. But anyway, pull back near its 15, continues you know, higher. They don't report earnings till July 25. So this is earnings line right here, trending just due north, folks. There's nothing to do here except for just hold it. I mean, or trim if it gets too big, but an 18 billion market cap, you know, you can see this, you know, sales and earnings growth, and that's what drives the stocks. I don't mean to be, you know, insulting or condescending or, you know, repeating myself, but, you know, I'm just kind of an earnings guy. I'm kind of a stickler for stuff like that. So sorry about that. This is IESC. This is another one that I'm going to feature on my gaps higher. So I'm giving away all my lead here. Oh my, but you can see the big blue bars here. I know it's a thinly traded stock. I don't care. It's going higher. I don't care if it's thinly traded or not. You don't chase that. You can see there's starting to get some ants there with all this buying. You know, one day, you know, it sold off one day. Give you one day to pull back, but then it gapped higher ahead of earnings. It sold off one day ahead of earnings and gapped higher with earnings and now trending higher, allowing the moving averages to catch up. You can see that RS line just heading north, folks. That one looks fantastic. And then IBP, I'm going to say probably most of you have not heard of Installed Building Products. Another one kind of thinly traded, but I just showing you this because the other two in the group have kind of, you know, they're extended and ripped higher. And this one is just still in a base here. So just saying, it's, you know, the earnings heading kind of north. It's in a base. I don't know. If it sold off last week, 11% off its high. It sold off 4% last week with volume. So anyway, you know, just showing you that one because, you know, the other two are extended and you can't buy them. So if you want to buy the laggard, that would be it. If you just want to own one in the group. Tidewater, this is oil and gas field services. I'm not a big oil and gas guy, but if I was going to own one, it would be this one. For longer term, this one, you know, broke out with earnings on May 3rd. That was the jobs report day on that Friday, and just pulled back the last couple of days, you know, allowing the moving averages to catch up. That one is doing nothing wrong. Weatherford is another one that I like. I would also buy that one. This is a machinery and equipment stock, not the field services where they're Tidewater building the, you know, the wind and solar in the ocean. This is Weatherford, pulled back to the 50 once it broke out. The first pullback to the 50 of the breakout was rewarded from 109 to 129. Thank you very much. I'll take a 20% gain or $20 gain. And then it pulled back to the 21 here and just, you know, being supported at the 21. Weatherford looks good to me. The earnings line just heading north and the stock is following along. So you got to kind of like that. STNG, this is one of these oil and gas transportation pipeline stocks. This one, earnings, not so much. The group has been pretty strong, climbing. You know, it's 54, but it's been climbing, and there's a lot of stocks in the group that are doing well. You can see the big move last week. Breaking out of the base here. And I'm just going to move on. These are not my favorite. I like Tidewater. That's about it. Eaton, diversified operations stock. Look at this thing. Just earnings line headed due north. Thank you very much. I had to buy this one when I found out they made golf grips. It's diversified operations. So these guys provide energy for the data center build out. Not being funny here. But I mean, if you're a trend trader, which I am, I mean, what's there to do here? I mean, buy out of a base, add on pullbacks to the 50, just count your money, I guess. There's nothing to do. with Eaton. Another one in this group, I'm going to hurry up here because I want to get to the gappers. This is Carlisle, broke out of a base, pulled back to the 50 for the first time, and then, bounced higher. So that one looks fantastic as well. And then I got to go to the drug stocks. Novo, once their Catalent deal goes through, they'll be manufacturing galore. If it goes through, I'm sure they're going to give them a hard time and make them, some stipulations that they manufacture, complete their contracts for the other drugs, but they're going to have an oral drug. They're going after the heart space, Novo Nordisk, and you can see their earnings line is just heading due north. That GLP-1 drug is a miracle drug, and Eli Lilly, same thing. But they're going to have an Alzheimer's. Hopefully, they're getting an approval here pretty soon. But you can see their earnings are a little more choppy than in Novo. I prefer Novo. They're a more steady Eddie. Lilly's got a more broader portfolio, but they also have a greater institutional support because Novo's an ADR, and this one has over 5,000 funds in it, all the biggies, where Novo, like I said, it's an ADR, and they only have 550. So they don't have all the IBD hot shots in there. Anyway, those two look good to me. And then if you want to take I think a bigger risk, Viking, they have a drug, they don't have any earnings or sales. So to me, if a trial goes bad with these guys, it's going to get like a 50% haircut. And that's why I can't go big on these speculative ones. Anyway, I'm going to move on to my last group before I get to the gaps. Constellation, this one looks fantastic to me. Gaps higher, consolidates, and now they just reported earnings last week, triple-digit earnings growth. Nice response. I thought it was going to have trouble with 200, and it still might. But you could see the RS line driving through the moving averages, and the earnings is heading due north. So the stock is heading due north, and the RS line is heading due north. So this is another one, like Eaton. I mean, there's not a lot to do here. Just kind of hold on to it until something changes. The trend changes, then you make the change. But anyway, a couple more in this group here. This is a spinoff I was talking about, GE Vernova, just IPO'd recently. But, they had earnings and responded well, and it's starting to get some moving averages, trending north. It doesn't have a big track record, but you can see with the earnings line going north, the stock's going north. It's been up how many weeks in a row? 5 weeks in a row. I mean, so yeah, man, I like stocks going higher, so it's going higher, so I like that stock. And then Rex. This is the last one I'm going to show. Rex. I just showing this because this is basing, not extended. It's a thinner traded stock, but alternative energy stock nonetheless. I got to show the weekly because the weekly review, and you can see the earnings lines heading north. The stock is heading north, and I think it's actionable. I mean, if you're into that kind of thing. So anyway, I'm going to move on. Like I said, earnings season can bring us new winners, and it also can, show us some losers, right? Like Akamai. If you didn't have this stock, you could see a gap lower before on earnings, and now it gaps again. So earnings season can be heartbreaking, and it can also be rewarding. I'm just going to go through some stocks here. Just bear with me, because I think, these could be new leaders. You could say, Marty, these things have been leading for a long time, and perhaps they have been, but they can also run a lot further. You could see the earnings line here with TMDX. You had a little hiccup here, and now trending north. You could see that big base, though. It did sell off hard, because they tried to, improve their services. So it had this cup with the handle and just broke higher. So yeah, sure. I mean, if you bought it here, great. But if you're looking to get into it, I think it could still run some more. So I'm into the, looking forward, not backwards. I'm just going to go through these randomly. So there's no rhyme or reason here. Just some stocks that I noticed up, I believe it was more than just stocks that gapped higher. This is Woodstock, Louisiana Pacific, gapped higher, 20% here on May 8th, which was Wednesday, and had an inside day on Friday, allowing the moving averages to catch up. This is a weekly review, so I got to show the weekly chart. Yeah, earnings line has been lagging. So anyway, just pointing it out. I already showed you IESC, so I'm going to go to Spectrum. This one broke out. You can see it just broke out of this base here, emerging from a long consolidation period here, and it gapped higher on Thursday, 12% with volume. So I'm just pointing these out. I'm not saying these are buys. I'm saying these could be new leaders, because what institutions do, they have models and they say, oh, this stock's going to earn, $2, and we think it's worth, $70 or $60 or $50, and now they earn $4, and they say, well, it's worth $120. And so they upgrade the stock and they start buying the stock, and you could see the earnings line is heading north. So you should be writing these down if you don't have them already. VITL, I didn't buy this one. I bought Bros instead. The reason why is because there's no base here. This thing, you can see the ants here, the David Ryan ants, and it just still continues to crank higher. This is Lauren, my friend Lauren's stock pick of the year in Ryan's stock contest. And anyway, it had an inside day on Friday, but to me, that's extended. You can't do anything with that. I mean, if you hold it, great. But you could see the breakout from that nice long big consolidation. This is a $10 egg trade, and the earnings are heading north, so the eggs are selling. Hee haw. All right. BLBD. These guys make those buses for school buses, natural gas, electric. Schools want to be what does it say here? Propane powered, compressed, natural gas, blah, 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 electric buses. So anyway, school districts want to be more efficient, cheaper. They have money, so they buy these buses. Hopefully it works out for them, but this one gapped higher, 25%. And I'm just pointing it out. I'm not saying that this is a buy, but I'm just acknowledging here, earnings line heading higher, stock heading higher. I kind of like stocks going higher, so I'm a sucker for that. This is a chemical stock, ASPN, another one that was traded up $66 back in when the market was heading higher. Then we had the bear market. Now it's emerging from this bear market. This chemical stock has been up, what was that, up 8%? It broke out the week before. Yeah, 56% move the prior week here. And on the daily chart, you can see that move. And it's been up every darn day. So that's what you call a gap and go. So it's just following through. And that's what you want to see with, this shows you that it's a healthy market. When a stock gap's higher, like I say, in a bear market, it would come right back to its buy point. But it didn't. It kept going higher. So these is kind of the signs that I put together that tell me, this is a healthy market and it's time to step on the gas. I already went through app 11. I did say that I bought Bros because it's still emerging from this base. I think I already went through this. Yes, I did. Yeah. So anyway, I'm going to bypass that one. Oh, ELAN. This is a pet. If you're a pet lover, veterinarian, animal health stock. I don't know if this could be a new leader, but it sure did move nicely on earnings here, up 25%. Thank you very much. And oops, earnings lines are going down, so I don't like that. But just acknowledging the move. Yeah, I would not touch that. Anyway, GEN. This is a cybersecurity stock. Earnings line heading gradually north, which is what we like. Still consolidating in a base here, even though it had this big move on Friday. Just one to watch here. Write that one down, see if it can break out of that base above the 2437 level. KD, not the basketball player. This is a computer software stock, and this one broke out on Wednesday. Nice move of 28%. Thank you very much. And then, pull back one day, looks like a little short stroke, and then traded higher. On the daily chart, on the weekly, it's just, 32% move. Thank you very much. You can see this is still like in an IPO base. So KD is definitely one to watch, and you can see the earnings line heading north. And I don't like a lot of software right now, but that's definitely one to watch. MRVI, I just did a screen and wrote these names down, so I don't know what a lot of these do. This is medical biotech stock. Where's that earnings line? Still heading south. Yeah, MRVI Life Sciences. Yeah, just breaking out of this base here, so just one to note. So my screen was for, I believe, 20% move last week. That one certainly qualified, and so did this one. I mentioned insurance, as being a real stickler. They're really grinding people for, we have to have insurance, auto, home insurance, and this one is not in the auto and home bill insurance, I don't believe, but anyway, Oscar, I'm just gonna go technically consolidated in a base, broke out more than 20% last week. Earnings line grinding higher. Oscar looks fantastic. I had this on my ready list here as I like, a stock trades higher, consolidates in a base, and then trades tight within a base and pulls back to moving averages. To me, that's a buy, but you had to buy it before earnings, so or hold through earnings because they had earnings last week. NTRA is another one. This one's been grinding higher for a while, broke out Friday, 10%. That one looks fantastic as well. SG, Sweet Green. Yeah. You can see the David Ryan answer as it broke out of a base, pulled back to the 50. First time after the pullback, and then blam, 34% move higher. I believe for the week it was up, 43% move. Thank you very much. Couple more, and then I'm gonna go. TOST. It's still, like bros, in this stage one base trying to emerge, and it looks like it is. So to me, I like this one a lot. TOST, big move of 13% there on Wednesday. So Wednesday was a good day for gappers. YETI, this is one that I don't really like the chart pattern here. You can see it looks like all the sellers have sold out though, right? Sellers get exhausted just like buyers do. Earnings line starting to head north. I mean, they had some, lull in sales there for a while, but it looks like it's starting to pick up. I would like to see it get back above, this high here. If I can go, I don't know, maybe $50. So it's got a lot of work to do below the 200. So I'm just showing you because, these are gappers that you got to pay attention to. This is a computer software database stock, which is, in with ESTC, which is a stock that I like, and VRNS. You can see the big base here. Breakout, the earnings line moving due north, the RS line due north, so that's one to watch, not to be ignored. Dan Zim, this is a stock that I do not like. I traded it well when it IPO, but I've kind of forgot about it since. But just acknowledging here, stage one base it is breaking out of with volume. So Zim, transportation shipping stock, not to be denied. And the last one, and then I'm going to go, is Qualcomm. I like the double bottom base pattern. I like the gap higher on May 2nd, which is that Thursday. Trading sideways, kind of like the index. A big, massive semiconductor, fabulous stock. And the earnings line, these are kind of cyclical too. You can see the earnings line heading south, and now it's starting to kick in. So definitely one to watch. Anyway, that's it for me. Thank you for watching. I'm going to have I'm seeing a lot of stock setting up in bases. And you can check me out at mcstockcharts.com. Thank you for watching. We never, ever give up.